All right, what's gonna come up in today's segment is we're not going to continue with any new learning units. We're going to go back because I can see that you guys experienced some difficulties on the the previous learning units. So I just want to ensure that everybody's actually on the same lane with me. Okay. And then we'll move on to, especially with the medical credits and other things. But there's a whole lot of examples in the study guide that we all gonna go through them step by step. Up until I'm 100% quite sure that everybody's actually clear on what we are doing. Okay, so I just want everybody to be on page 66 of your guide. I think that's where we're gonna start off today. But looking at page 66 here, we're looking at the ordinary resident. I think we discussed this, but we didn't go into deeper details on that one. The reason why I'm revisiting this learning unit is because I'm suspecting that it might be part of your exam, which is why it's important for me to redo it again. If you look at the physical present test there, in terms of the requirements on the physical present test, it says that an individual must be in our country for a period of 91 days in total during the year of assessment and under your considerations. All right, so that should be like in a period of a year. We call that the year of assessment. And the second one, it will say that 91 days in total during each of the 5 successive year. Obviously, that will be counted as your year of assessment. All right. On that one, it means that if somebody has been in the country for less than 91 days, that person would not meet the requirements in terms of the physical present, right? So for the physical present, for somebody to meet these requirements, you need to be in the country for 91 days or more, okay? So that should be in 1 year. But in 5 years, you should be in the country in a period of 91 days or more for every year of assessment. So in 5 years, that's bulletin number 5. It says that in 915 days, your number of days should be counted for at least 915 or more in 5 years period. Okay, so I don't know, but I suspect that you might encounter this kind of a question in your assignment. So I think you must be very careful on this one because it might be out of your exam as well. Okay, let's have a look at example 3.1 where it says it's page 67. Yes, it says that Jabu, who is not an ordinarily resident in the Republic, was physically present in the Republic for the following number of days. Right, the year of assessment, that's on your left, and the second one is the number of days. So in 2016, Jabu was physically present for 95 days in our Republic. 2017 is 110, 2018 is 115, and 2019 is 92, and 2020 is 151. 2021 is 355. If you can look at the number of years here, the amounts to 6 years, right? But basically we're looking for 5 years. 5 consecutive. It's either it's 1 year or it's 2 years or 3 years to 5 years. And the required says that determine whether Jabu is regarded as a resident under the physical present test for the 2021 year of assessments. I'm going to ask everybody to actually unmute your mic so that you can discuss this with me. If you can look at 2026, in terms of the requirement, Jabu does meet the requirement in terms of the physical present test because the number of days is 95. Do you all agree on that? It's greater than 91 days. Does it make sense?
Yes.
All right, thank you. So if you look at 2017, it's actually the same thing. It's 110. 2018 will be 115. 2019 will be 92. And let's end things on 2020. It says 151. If you look at the number of days, they all qualify in terms of single years, all right? But if you add 95 plus 110 plus 115 plus 92 plus 151, if those number of days doesn't amount to 915, it means that in 5 successive years, Jabu doesn't qualify to meet the requirements in terms of the physical present test. However, if they are actually 915 and more, it means that Jabu does qualify. I'm just going to add up my number of days quickly, and then you can do that on your side with your calculator, just to ensure that we are actually on the same page. 115 plus 92 plus 151. So we've got the total number of days in 5 years. It amounts to 563. So obviously it's less than 5 years. Okay. So it means that in terms of the physical presentation, it does not qualify to or does not meet the requirements for that one. So just be careful when you are approached with this kind of a question. But let's look at how the lecture what it comes to conclusion when it comes to that. Looking at requirement number 1, I think you can see that it says, was Jabu present in the Republic for 91 days in the current year of 2021 year of assessment? This requirement is met, yes, because the number of days are greater or equals 91 days in terms of the numbers. Since Jabu was physically present for 355 days in 2021, I think more here they just made about, let's see, 355 days in 2021. Okay, let me just go back there. I just want to check the number of years quickly. All right, in 3 years, let's see, 20. Right, they excluded the 2021, which is the 6th year, as I've explained. But in terms of the number of years, about 91 days, the requirement has been met. Okay, so ultimately, when you see if they exceed 5 years in terms of the year of assessment being given, in terms of, again, in terms of the number of days, then obviously going to calculate that. And that's why there's an exclusion when it comes to the last year of assessment, which is 2021. It's our 6th year, right? Remember, we're dealing with 5 years here. Let's look at requirement number 2. It says that was Jabu present in the Republic for the period exceeding 91 days in aggregate in each of the previous 5 years from 2016 to 2020. So in terms of this, the requirement is met since Jabu was physically present for more than 91 days in 2016, 95 days, 110 in 2017, 115 in 2018, and 92 days in 2019, and 2020 is 151. Let's have a look at requirement number 3. It said Jabu was present in the Republic for the periods exceeding 915 days in aggregate during the previous 5 years of assessment. It's a no. As we've added that number of days, it gives 563. Can you all see that? So if you do single years from 2016, 2017, 2018, 2019, 2020, in all of those single years, they're exceeding 91 days. But if you do that in aggregate of five years, they don't exceed 915. Does that make sense? Or is it clear? On a yearly basis, Jabu does meet the present physical requirement. But when you do the aggregate of 5 years, it doesn't exceed 915 days. That's per our act with the theory. If you read the theory quite well, you will see that Jabu does meet the requirement. So requirement number 1, in terms of the solution, it excludes our 7th year. I think it's 2021. Okay. So requirement number 2, they've actually assessed single years from 2016 up until 2019. Those years were not combined. They were done in single. So in each and every single year of assessment, Jabu does meet the physical present test. Okay. So meaning that every year, Jabu managed to be in our country for more than 91 days. Okay. If not equal or exactly the same amount of days. All right, let's have a look at the other one here. So this thing it's a bit frustrating because let's see if we can try this. Maybe it might work. All right, can you all still hear me?
Yes.
All right. Okay, let's have a look at Let's have a look at example 3.2. I hope you can see it as well. It says Yoliswa, who is not ordinarily resident in the Republic, was physically present in the Republic for the following number of days. The same thing, number of years, 2016 to 2020. The number of days, it's 1113 up until 305. So if we look at the number of years, it's 245. So now we're looking at the exact aggregate number of years, which is 5 years. It says that during the 2021 year of assessment, Yolizo was physically present in South Africa from the 15th of April 2020 up until 31st of July 2020. And that is 108 days. Right, let's go down there. Let's look at the required part. It says that determine whether your Yoliswa is regarded as a resident under the physical present test for the 2021 year of assessment. Then you try to complete this on your own without referring to the solution. Right, I hope you did it. Right, in order to meet the requirements of the physical present test, Yoliswa must satisfy all the requirements of the test. So this is one of those easy things. You just have to look at the requirement and the number of days and the number of year of assessment. Right. But the key issue there will be in single years, it has to be 91 days or more. Or in aggregate, it has to be 915 days or more. And that's it. So looking at requirement number 1, it says, was Yoliswa present in the Republic for 91 days in the current year of assessment, which is 2021. This requirement is met. It's met since Yoliswa was physically present for 108 days in the 2021 year of assessment, right? Yes, he's been in there for those number of months, which are qualifying to be the year of assessment. However, the days that she was in our country was 108, which is greater than 191 days. Right, requirement number 2, it says Yoliswa was present in the Republic for the period exceeding 91 days in aggregate in each of the previous 5 years of assessment, as 2016 to 2020. This requirement is met since Jab was physically present for more than 91 days in each and every of those single years that Yoliswa was actually in the Republic. Point number 3, was Yoliswa present in the Republic for a period exceeding 915 days in aggregate during the previous 5 years. The aggregate number of days during the previous 5 years, it amounts to 115 plus 147 plus 208 plus 202 plus 305, which is 975. So you can see that that makes Yoliswa a resident. Does it make sense?
Yes.
Okay, so is everybody clear on that? Because we're going to move on to the next segment. Is everybody clear on that?
Yes. Yes.
All right. No, that's I'm happy for you because you are actually clear on that part. Right. So our next segment, I want us to move to the gross income, which includes your dividends and all of those. So I need everybody to move on to page 72 quickly. 72. Is it open? Can you all see my page? 72, 73, somewhere there. Can you all have it? Is it there?
Yeah, it's there.
All right, that's good. Well, let's have a look at PC. It's not benefiting me today. All right, let's do these. All right, please bear with me there. Let's have a look at 71. Right, 71 into 3.5, which is with the heading called specific inclusions. It includes the specific inclusion and the gross income. As you all know that when you do your gross income or the tax liability calculations or the net tax payable or refundable, this is your starting point on the gross income, okay? So the Act tells us that every income, including the fringe benefits or the income that you have received as part of your service rendered, should be included under our gross income. But our second line part, which is our exemptions, it will tell us as to whether that line item in terms of the income does qualify to be an exemption. All right, let's look at what the theory tells us in there. So it says that all the dividends received by the taxpayer are included in the gross income, including the fringe benefit. You remember when even though we're not in the part of the fringe benefit as a chapter, you remember last week we discussed that the income that you get as a fringe benefit, because remember, fringe benefit is what your employer pays on your behalf. And then your income will be your own income that you have earned. Pretty much as you have earning that, but you're not receiving that in terms of the physical cash, like your salaries and stuff like that. All right, or some other exceptional income. Okay, so the fringe benefit, as I've told you, it will include your traveling expenses, it will include your medical portion that is paid by the employer, or your pension or provident fund. That's going to be part of your, that will be part of your, it's going to be part of your income. And then we're going to look at the second part, which is your exempt. Exempt means that doesn't qualify to be part of your income. You cannot be taxed on that one. Okay. That will include the amount for the services rendered. If you've got a business, on the other side, you're going to receive income on that one. So that has to be included. If you've got your investments, where you are receiving your interest and stuff like that are going to be included in that. However, the Act has advised that when an income has been received, we're going to look at a factor called the marriage type factor. If you're married out of community of property, it's not a problem. But if you're married in community of property, that's where the problem would be, okay? Because of the 50-50 share in between spouses. Right, that should be taken into consideration. So, but here's the key thing that you must know. When you're given the question, they'll tell you, Pootie is married to so and so and so. The type of marriage is this, age is this, how many kids, and all of those. So your top part, when you're given up a question on the taxable income, you need to look at that, right? Because your age, it affects a lot of things. Your rebates, your medicals, you understand, and your medical credits, but you'll see that as and when we do questions, or as and when we go along, right? So let's have a look at the exempt. If you go back to the framework there, the exempt part will be there as well. So let's look at number one being the South African interest paid to South African residents. Interest received by South African residents is included in the gross income under certain sections. It's up there, you can read that. The reason why I mentioned the age as a factor, look at what it says. It says the person younger the age of 65, they qualify for a limitation of 23,800 Rand, meaning that any interest that you are receiving below 23,800 Rand, they qualify to be an exemption in full. However, if let's say your interest and you're younger than 65, it amounts to 23,000 or let's say 24,000 Rands. 200 Rand of a difference is going to be taxable. Right, but you have to show me that the person is younger than 65, limitation in terms of the interest amount is 23,800 Rand. Let's look at the people who are actually older than 65 years. Limitation amount is 34,500 Rand. So the same principle would apply as well. Should this person receive an amount of more than 34,500 Rand, so you're going to tell me the limitation is 34,500 Rand, and the difference is actually qualifying to be, and it doesn't qualify to be part of an exemption. Right. Down there, they say that the exemption does not apply to interest received from the tax-free investments, right? I mean, the investment that you're making out of the tax-free, there's no tax attached to it. Why should you pay tax on the tax-free investments? That's part of it. Dividends, the dividends received from a local South African company will be exempted, okay? Remember, you're going to show that on your first part, and then the second part, you're going to show them on the brackets to say fully exempt. Right, foreign dividends, I think we did this the last week. All right, who's getting confused when it comes to the foreign dividends? Quickly, who is getting confused in terms of the foreign dividends? Right, here's my advice to you. When you're faced up with particularly an exam, things like your dividends or your exemptions or gross incomes and stuff like that, make sure that before you write your exam, you write down your page number and get in there so that it will serve you as a memory. Should you get confused by something, you just quickly page up on that one, and then you check. Just write aside your page number because you'll be writing it home. Write up your page number somewhere there, or you highlight it, that will be your decision. So whenever you're faced up with the issue of your dividends and stuff like that, you just quickly page up on that one, and then you know where to find your solution. I think it will help you. Right, foreign dividends received from a company listed on the JSE. I think we spoke about this the last week. The foreign dividends received from foreign company in which an individual holds 10% of the total equity shares or voting rights. This is where you have to be careful. You need to know whether the person who is getting the foreign dividends hold what amount of a percentage in terms of the equity shares and the voting rights. I think it will lead you as to how you're going to tackle your question. Let's have a look at your example 3.6. Mr. Zondi received an amount of 3,000 Rand of foreign dividends from a foreign company where he holds 12% of the total equity shares and voting rights. Okay, actually it represents the above note. The foreign dividends will be fully exempt as Mr. Zondi holds more than 10% of the total equity and shares. Meaning that if I hold 9% in a foreign company, so when I get the dividends, I cannot be fully exempted on that one because I don't meet the requirements in terms of the full exemption on foreign dividends. So it's 10% or more. I hope that makes sense. Clarity. Mr. Webb received 1,200 Rand in foreign dividends from a foreign company where he holds 8% of the total equity shares. Let's prove that. Right, the foreign dividends will not be fully exempt. I said that, right? As Mr. Webb does not hold at least 10% of the total equity shares and voting rights. The foreign dividends will qualify for a partial exemption as explained below. I think that's where I got it wrong there. Probably the partial exemption as in is that one of 25 divided by 41. It just adjust to that one in terms of the exemption. However, please make note of this. When you do your second year tax, if you're going to continue with accounting, or third year, or post-grad on tax, these are the kind of the scenario questions that you're going to get, and then you're actually going to explain it with calculations included on it. You need to tell me why this person doesn't qualify for full exemption. Obviously, that will be the reason that you are actually below 10%, okay? And this person will qualify for the partial exemption as explained in the section above. And then that's how you allocate marks. So you need to train yourself in terms of how do you elaborate more in terms of giving reasons. Right, partial exemption, all foreign dividends that do not qualify for full exemption as described above qualify for a partial exemption. Partial exemption is calculated as 25 divided by 45 of the gross foreign dividends received. That's the only tricky part when it comes to the foreign dividends received. The rest will qualify for the full exemption, right? As per the Act, it's still standing at 25 divided by 35 ratio. So you can see that on page 75. Okay. And the other one that you need to know, local dividends, they're fully exempted. Right, let's have a look at example 3.8. It says Rosetta, 25 years old, and a South African resident, and the following investment income for the 2021 year of assessment. With an interest of 14,000 Rand, and the local South African dividends of 5,000 Rand, and the foreign dividends not fully exempt. So this is how they will trick you. They will trick you with regards to the foreign dividends which are not fully exempt. They told you that they're not fully exempt. That means that they qualify for partial exemption, or they qualify to be fully exempted. But not fully exempt means that they don't qualify to be fully exempted. The question says that calculate the investment income of Rosetta, which will be included in her taxable income for the 2021 year of assessment. Right? And I hope you guys are following what the lectures are saying, that you need to do things before you go through. Let's look at what they did here. Gross income, as I've said, all the incomes are going to be added under your gross income, and I'll see which one qualifies for the exemptions. Interest of 14,000 Rand, local dividends of 5,000 Rand, foreign dividends of 34,000 Rand, a gross income amount of 53,000 Rands. Let's look at the exemption part. So as I've told you, the person is actually under the age of 65, and the interest limitation is 23,800 Rand. So the interest amount is 14,000 Rand, fully exemption. The local dividends is fully exempted. Let's look at the foreign dividends and how they partially exempt that. It's an amount of 34,000 Rand, and we adjust that then with the ratio of 24 divided by 45. Okay. Before I ask you any tricky part, let's just look at Vui. 3.9, Vui is 68 years of age. If you look at comparison in between your 3.8 and 3.9, the only difference in here is what might be given as part of your information. But they're trying to show you the difference between the age factor of the taxpayer. The previous one was 25 years of age, and this one is actually 65. It's under 65 and over 65 years of age. So Vui, who is 68 year old and a South African resident, received the following investment income for the 2021 year of assessment. Interest from a South African bank of 66,000 Rand. Interest from a foreign bank of 34,000 Rand. And local dividends received of 59,000 Rand. Vui also held a 10% share in a foreign company and received dividends of 98,000 Rand in dividends during the year of assessment. Excuse me. All right, calculate Vui's taxable income for the 2021 year of assessment. Right, let's have a look at how did they tackle that. All the income have been included under your gross income, including your interest as well as your local and foreign dividends. But let's look at the exemption. The interest is limited to 34,500 Rand because the person is. Let's have a look at how much did this person receive? 66,000 Rand of the local interest, Can you see that? So we are limiting the amount to 34,500 because of the age factor, greater than 65 years of age. Interest in a foreign bank, no exemption for full interest. So when you see the foreign interest, you must always put a dash. It doesn't qualify for an exemption. Right, let's look at the local dividends. Local dividends is 59,000 rand, fully exempted, and foreign dividends fully exempted of 98,000 rands. There's something that doesn't make sense to me there. Oh, sorry about that. No, it's actually making sense. It's 10% of a share in a foreign company and receive 90. So remember, if anything is below 10% of the shares in a foreign company, that's where you bring the ratio of 25 divided by 45. Don't forget that. Okay, so if you still have to end marks in there, foreign interest, they don't qualify for an exemption. The only thing that can treat you is your foreign dividends as well as your interest. In the interest part, please do not forget, you are looking at what's called the age factor. How old is the person? That's very important. Let me bring you back into the speed. Any questions? Welcome, Popozo, and who is that? Hope. Welcome to the class. Is there any questions? Who need clarity on somewhere?
Thank you for welcoming. It's Popozo.
Yes, Popozo.
You said on the like if maybe the person is like the share is less than 10%, that's where you put the 25/45. Am I right?
That's where, if the person is, okay, let's just go quickly on what it says with regards to the
like example 3.8, I see that they put the 25.45%. I mean 25.45% divided by, but I'm not sure how it goes to that. How am I gonna check maybe if the person is like they have less than 10%, or like on that one I'm a little bit confused with the percentage share actually.
Okay, can we all go back to example 3.8 where Kopos is actually raising a concern about it? The foreign dividends not fully exempt, but if the foreign dividends they're telling you that is fully exempt, obviously you're going to put the entire amount under the bracket as an exemption. But mere fact that you mentioned that it's not fully exempt, that means you need to partialize.
Okay.
You need to bring your 25 divided by 45.
All right, now I get it.
Do you get it now?
Yes.
Let's bring the others into the speed. Any questions? You can't be this far without a question. You must be any question. Probably don't know how to ask that kind of a questions, but please do ask so that we can clarify it, because there's going to be lots and lots of questions ahead of us. Okay, remember, if you get that part with regards to you, obviously you guys are faced up with the multiple choice question. It's going to be a bit tricky because should you miss a step, that's where you're going to lose marks. And the unfortunate part is the question is going to be designed in a sense that you are, or you might be able to lose your step, meaning that they're going to lose a step intentionally so that they would bring that. As I was saying, that sometimes they'll trick you in the sense that they would miss a step that you would miss as well, intentionally so, in the class. And then obviously, if you guys are missing the exact same step that they did miss, it means that one of the answers in the multiple choice would be there that you are going to get when you calculate that. And you'll be confident enough to say, I got my answers correct. And that's not going to be the case in most cases. And that's why students are getting surprised. But okay, I got exactly the same amount when I was doing the calc, but why did I fail? So you need to be very careful when you're dealing with those kind of question. So it is no coincidence that that part of the question will be in the exam. You must just be prepared enough for it. It would be there without any doubt. Okay, Hope, any questions from your side? Let's see what Hope says. Sorry, guys, okay, it means Hope is fine. Homoto, Pearl?
Sir, I'm fine.
Oh, you're fine. Oh, and Pearl is as well fine. Okay, Mujabing is as well fine. Mujabing, I hope you're fine. Okay, so we are done with example 3. That's going to be the work for today. We'll just go back and forth with regards to our exercises just before we move on to the next one. Right, let's have a look at we did VUI, right? We did VUI, right? Okay, So I think this would answer your question because you were confused about that. Let's just make sure that you actually understand it. Vo is 68 years old and is a South African resident, and Vo received the following investment income for the 2021 year of assessment. Interest from South Africa was the amount of 66,000 rand. Then the interest, okay, I think we did this part. This is that where we Vosi also holds, okay, let me emphasize on this. Voi also holds a 10% share in a foreign company and received 98,000 rands in dividends during the year of assessment. Okay. As opposed to what you were saying, because remember the 3.8 was saying not fully exempt, right? Meaning that we need to adjust the ratio. So this person is actually holding 10% share in a foreign company and received 98,000 rand. The mere fact that this person is actually holding the 10%, it's per the act. Okay, 10% or more, it's fully exempted. Any rate with regards to or the below 10%, that means that you need to apply that the ratio 25 divided by. Okay, let's have a look at 3.8. Katlego, 48 years old and South African resident, received the following investment income for the 2021 year of assessment. The interest from a tax-free investment of 23,000 rand. The foreign dividends from the JSE listed company. One thing I like, before I continue, one thing I like about this kind of the interest and the dividends, there's obviously multiple examples with regards to how are they treated, okay? So if you look at your example 3.8, 3.10, we've got the same heading with regards to those kind of companies. However, they're treated differently because they're given differently, right? So it's just for you to be aware on, okay, if I'm dealing with an interest, what type of interest am I dealing with? How old is the person? And you're done with that. Interest from a tax-free investment is 23,000 rand, and the foreign dividends from the JSE listed company is 42,000 rand. The local interest, 51,000 rand. The local dividends is 9,800 rand. Calculate Katlego's taxable income for the 2021 year of assessment. Then you also need to calculate Katlego's taxable income for the 20 year of assessment if Katlego is actually married in community of property. Now we bring in the marriage factor into our solution. Right, as I said, all the incomes would be there. Can you see your interest, foreign, local, and local interest as well as local dividends. Let's look at the exam part because that's where you have to be sure that you're doing the right things. Because the first part, you just take things and put them as long as they do qualify as part of the income. Interest tax-free investment. So the exemption would be 23,000 rand. There's no tax about that. It's interest tax-free, fully exempted. Foreign dividends fully exempted, 42,000 rand. Then the local interest is limited to 23,800. Let's see, is it below that? Let's look at the local interest. Local interest is greater than 23,800 rand, but we are limited to 23,800 rand. That is why we don't include the whole 51,000 rand as an exemption. Local dividends, sorry, I think the entire amount has been fully exempted as well. Right. Taxable income is 27,200 rand. That's your gross minus your exams. Okay. Number B says that we're looking at the gross income, provided if this person is married in community of property. So if you can look at the all amount in our gross income, they're divided by 2 because of an equal share in between spouses. The marriage type is in community of property, meaning 50-50. That's the law, guys. So every income is multiplied by 50%, which it means that we need to look at the taxable amount for the taxpayer, which qualifies to be divided by 2 multiplied by 50%, or equally so. Let's look at the exemption there. I think the same thing has been applied. Interest-free exempt. So the upper part was 23,000 rand, and if you divide that, should be 11,500. The foreign dividends is fully exempted, 21,000. Local interest, 23,800 rand, and the local dividends is fully exempted as well with an amount of 4,900. Is there any questions? Any questions? All right, let's do this one. 3.11. We've got questions at the end of the study guide. So those ones I'll be doing them with you. Sorry, you will be doing them with me, basically, not me leading you. Carl received the South African interest and see the amounts below in South African dividends of 5,000 rand with the wife and interest of 9,000 rand. Calculate the exemption for interest and dividend received by Carl. If Carl is 40 years of age and an interest of 11,500 rand, married out of community of property. The marriage factor is still in here. However, this time around, they married out. Okay, yours is yours, mine is mine. And that's it. B, Carl is 66 years old, interest end of 36,000 rand. The marriage type is still the same, continue type. Number C, Carl is 40 years old and interest of 11,500 rand. However, the marriage is different in this time around. We share 50-50 equally. Attempt the example without referring to the solution. So the dividend exemption of 5,000 rand, can you all see that? It's our local dividend. And the interest exemption of 11,500 rand. It's fully so simply because the marriage type is out of community of property. Dividend exemption of 5,000 rand with an interest exemption of 34,500 rand. Okay, let's have a look at the number B, 36,000 rand of interest is married out of community of property. Can somebody tell me why the interest exemption is 34,500 rand? Quickly. All right, nice one. I'll get you as we go along there. The interest exemption is actually because look at the age factor.
Sir?
Yes, ma'am.
Is it not because of Carl's age?
Because of Carl's age. That's very correct. Thank you so much for that. As I was saying, that because of the age factor, that's why you see the limitation is 34,500 rand. So let's look at C. Dividend, 40 years of age. So there's an equal share due to the marriage type in community of property. Exemption of 5,500 rand multiplied by 50% is 2.5. Then interest exemption, let's look at the note and what I say. Carl is married in community of property and he's taxed on 50% of his wife's interest. And 50% of interest, right? That's 4,500 rand plus 5,797. That's where you get an amount of 10,250. Right. So is there any questions?
Yes, sir, I have a question.
All right, let's see who's asking the question.
It's Pearl.
Hi, Pearl, please go ahead.
Okay, I can see that on B, right? Carl is 66 and the interest is 34.
Yes.
And then on A, Carl is 40 years old and the interest is 11,000 rand.
Yes.
Is it not supposed to be the same interest exemption, which is 23,800?
All right. Can somebody help? Is it Pearl?
Yes, sir.
All right. Can somebody quickly assist Pearl? Any take from your side? That's a very interesting question, Pearl. Okay. I can see that everybody's stuck as you are. However, Pearl, you said on A, right? You worried about the interest exemption. All right.
Yes.
The age factor being less than 65 years of age, we've been told that the limitation in terms of the interest is 23,800 rand. I don't know if you remember that. Meaning that anything below that is going to be fully exempted.
Right.
Up until 23,000. That's why you see just like that. So the difference between A and B is because Carl here is regarded as greater than 65. Interest exemption is 34,500 rand as a limit. And he earned an interest of 36,000 rand. So the first one is actually below the limit, and the second one is greater than the limit itself, based on the 8 factors. Right. I want us to look at question 3.2. Right, let's have a look at question 3.2, 10 marks in 12 minutes or under. Mr. Giovanni is ordinarily resident in Italy and not ordinarily resident in South Africa. This one is a question that is based on the physical present test requirement. All right. During a working holiday in 2016, he was in South Africa from the 1st of April 2015 to the 15th of February 2016. He enjoyed staying in South Africa so much that he returned and lived in Cape Town from the 1st of June 2016 to the 31st of December 2016. During the year of assessment, he again visited Cape Town from the 1st of June 2017 to the 30th of September 2017. And during 2019, the year of assessment, he returned back to Cape Town, where he lived from the 1st of October 2018 to the 31st of December 2018. During the 2020 year of assessment, he was in Cape Town for 100 days. He was in Johannesburg again from the 1st of September 2020 to the 31st of January 2021. But Indicate if Mr. Giovanni is a resident of the Republic for the 2021 year of assessment. You're faced up with this kind of a question in the exam. What will be your first approach? You can't just leave 10 marks to go away just like that. As I said that you guys are going to lead me here, whether you like it or not. I just want you guys to give it a try on this one.
I'm gonna try because I think this part I understand. So
Okay.
when it comes to that, like I said, you need to look at the first requirement, whether they've been in the country for 91 days within that
Okay.
year of assessment. So
Okay.
looking at between April the 1st, 2015 to Feb 2016. So we can then calculate the number of days there to determine whether it's over 91 days.
Okay. So you said from which period or from which month?
I get it says from the first, the first part it says he was in South Africa from the 1st of April to the 15th of Feb 2016.
Yes.
Which was before. I get it, the thingy ends at every year of the 29th of Feb, am I correct? Financial year end? Yes. So which means we have to calculate from the 1st of April till the 15th, the number of days.
Okay.
Right?
Sure.
Okay. Yeah, I think the same will apply for the second year. And then it says here, he enjoys staying so much that he returned and lived in Cape Town from the 1st of June to the 1st of June 2016 to 31 December 2016. So
Okay,
that's
so
6 months. Yeah, so we also need to calculate the number of years, right?
right.
Number of days.
Number of days.
Yes. And then they say during the 2018 year of assessment, he visited in 2017, 1st of June 2017 to the 30th of September 2019.
Okay, 1st
That's
June.
like, yeah.
2017, right?
And then to 30 September, so that's like 3 months. So we also need to calculate the number of days there.
Okay, 30th of September, the very same year, right?
Yes, very same year, yes.
Okay.
And then 2019, from the 1st of October to the 31st of December 2018.
1st October, which is this? 2018, right?
Yes.
To the 31st December 2018, right? The very same year.
Yes.
Okay, thank you, Homoto.
All right.
You can go ahead.
And the last year, which is the 2020, it says he was there for 100 days. So I think they were just given the number of days, which makes it easier.
Okay.
Yeah, and then I think they say we need to then calculate, whether he qualifies as a resident. Is that what the is saying? Yeah. So yeah, like I said, we need to determine the first requirement on the year to year if they meet 91, and
okay, let's see. I think you would need the calendar on your side when you attempt this kind of a question, right?
Okay, yes.
For people would have, because some months they don't carry the same days. So obviously you need to be aware, since when we're dealing with 2015 to 2016, 2016 to 2017. I don't know if you do get what I'm saying.
Yeah, but I mean, if you're looking at from April 2015 to 2016, automatically we have an average of about 30 days a month, right? So already tells you that by month 4 or 5 already they qualified for the 91 days.
They qualified for this one.
But having a calendar will help. Sorry?
Sorry for interruption. As you were saying? I didn't
no,
get
I was saying with the 1st of April 2015 to 15 Feb 2016, I'm saying just by looking at that, automatically you can see that they might qualify for the 91 days.
Okay, that's very
the calendar there as well.
That's very correct, because the months are bigger in that year.
Yeah,
so automatically the person yes. Yeah. I agree with you on that one, Carl. So number one, you confirm that Mr. Giovanni made the physical present test because the number of days are greater than 91 days.
100%.
Okay, let's look at the second one. I agree with you on that one. I hope the other people in the group, they do agree as well. Yeah, let's look at the other one, the second one.
Yeah, 1st of June 31 also, I think they are within the same because that's 6 months.
6
so like,
months.
Yeah, so a minimum of 3 months can give you about 91 days. So if it's
Okay.
6 months, it means automatically it's over 91 days.
All right. That's a clever move on that one. A minimum of 91. Sorry, a minimum of 3 months. It just never crossed my mind. A minimum of 3 1. A
A
minimum
minimum
of
of 3
3
months
months.
can automatically give you 91 days.
Yes, that's very
That's how
correct.
I would, yeah.
All right. Can we move on to the third one?
Third one is from 1st June to 30 September. Yeah, I think there we can then calculate the number of days. So it could be less, could be exactly 90 days or 91 days. Yeah. Because
Okay.
June ends on the 30th, is 30 days. July, 31. Yeah, it's exactly 91 days.
It's exactly 91 days. Because whether September is 30 or 31, it doesn't matter, right?
Yeah.
So I'll just say exactly 91 days. Well, let's look at the 1st of October 2018 to 31st December 2018.
October
October is it 30 or 31? Because I think
31.
number 3, 31.
Yeah.
And then November.
30th is 30 days.
So it's 30 days. So automatically this one will be 91 as well.
100%.
I think it's 92 days.
Yeah, 92 years.
Okay, so 100 days would be automated, right, in 2020.
Yeah.
Right, Pal, do you want to elaborate more in terms of, remember, okay, thank you so much for the breakdown, and I think you're correct on that one. Remember, when you are 5 years, you're going to look at an aggregate, right? So that's why we're looking at the number of 915 days in 5-year aggregate. So I believe that we've got 1, 2, 3, 4, 5 in terms of the number of, what is it, in terms of the count, in terms of the number of months that are given on the scenario. Okay, so the tricky part here, because we're looking at the aggregate, did I interrupt you, Pal? Do you want to go further? Sorry. Sorry for that.
No, you can continue.
Okay, but thank you so much for that breakdown. You did exceptionally well on that one. But remember, you are going to look at those consecutive years, or those consecutive number of months, and then where you need to add the number of days in there. They should give you a total of 915 in aggregate for the number of 5 years. I don't know if you still remember that part.
Yes.
Yeah, should the number be greater than 915, then that means the person would become an ordinary resident in the country or in the republic. And then if they are below, it means that the taxpayer doesn't qualify to meet the requirement in terms of the physical present test. Does it make sense?
Yes.
Be careful of that one. It's highly, there's a number of ways that it can be asked in the multiple choice questions in your exam. Okay, don't say I didn't tell you. Right, let's look at, I think it's 3.3. Please don't look at your solution. This one should be easy. Sipo is 22 years old, is married in community or property to Betty. And the following information relates to Sipo for the current year of assessment. We've got a bonus, we've got a salary, so they say bonus is non-pensionable. We've got the local dividends, and then we've got the local interest. So Betty received a local interest of 18,000 during the current year of assessment. Any attempt? Let's see who's available now. They want us to calculate the taxable or the gross, I think it's taxable income, gross income and exempt income for the current year of assessment. Anybody quickly? Mutseperi? Okay. So was it Khomotso who gave me the answer on the last question? Was it Khopotso? I think I'm getting confused on Khopotso and Khomotso. It was Khomotso. Thank you. Khopotso, please make an attempt on this one.
Okay, I'm just gonna try. I'm not sure if I'll make it though. With this one, how I was gonna handle it, I'm gonna take the salary first, like which is like, okay, we check firstly the age of the person, which is 22 years. They are younger than 65 years. I think that's the way we have to start with, and then take the salary which they are making, which is 150,000, and then plus maybe their bonus is gonna be 168,000 at this moment, including their bonus, because still the bonus will be taxed, if I'm not mistaken. The bonus, they tax also the bonus on our side. Like, yeah, normally what I know, they tax also the bonus which you're getting, which is going to be added as well on your salary. Like maybe it's going to be 168,000. And then that's the amount that we'll be getting. So which means we'll be taxing from 168,000 from now, which is the salary including the bonus.
Right.
And then we're gonna take that amount include. Let's see, does the local dividend? No. That's why I'm getting COVID. I'm not sure if maybe we have.
Anybody who want to assist Khomodo?
I think you first have to add the salary, the bonus, and the dividends, I think, to make up the gross income.
Okay, you want to tell me how much did you get your total gross income?
I think the gross income will be 177,900.
Okay. So how did you get to that figure?
I added the salary plus the bonus,
right,
plus the local dividends.
Okay. What about the local interest?
Oh.
Do you want to tell me why did you leave the local interest out as part of your course?
Because on the notes of specific inclusions, local interest is not there.
Please come again. Can you go ahead?
Oh, I'm saying the local interest on the specific inclusions of gross income. Local interest isn't one of the inclusions.
Why isn't it one of the inclusions?
It wasn't.
All right. Thank you so much. All right. You guys were right when you say that the age is actually important, but in this case, it's going to be important when it comes to the interest only. Okay. However, I think before I continue with this class, I mentioned that you guys need to know what the frameworks entails, because your first part of the framework would be the gross income. And I told you that every income that the taxpayer receives would fall in there. The only thing that will exclude that, should it qualify, it will go under your exempt income. So basically what you're going to do, you're going to say gross income, and then you put your salaries, your bonus, local dividends, and your local interest. Okay, and then that's where you're gonna pause. Local salary, bonus, and local dividends they're fine. They don't need any adjustments. However, on the local interest, you're going to look at the issue of how old is the person, greater or older than 65 years of age. And then if I'm below 65 years of age, it means I'm going to get a full exemption on that one, because the limit is 23,800 rand. I don't know if you guys remember that. Can you see that? But you showed me how much my gross income would be. However, you remember when I talked about the loophole that they might see? They can give you a list of whole. They can give you. I'm going to ask you to be on mute so that we can. I think it's Hopoto. So you remember when I told you about the weakness of the loophole? They would give you a whole lot of incomes, and they would ask you to calculate how much will be the gross income. So people like I think it's Paya or Homozo or Hopoto. You said your salaries and bonus and local dividends will be there. However, they can give you the three amounts in terms of your solution, and they will add up to exactly how you're going to find it in the calculator. But they leave local interest intentionally. Do you get what I'm saying? So hence I said every income that the taxpayer receives will fall under the gross income. Meaning that 150 plus 18,000 plus 1.9 plus 26,000 will form part of your entire gross income. The adjustment will be required when you do your local interest or your exempt income. Okay, so your exempt income would include of your, in this case, it was going to be the local interest because the limit is 23,800 rand. Makes sense? So what you're going to do is you're not going to take the entire 26,000 rand. You're going to take 23,800 rand because it's greater. Are you happy? So anything below 23,800 rand, it's not going to be, or it's going to be fully exempted. Make sense? So you're going to have one exemption in there. There's another thing that you must take into account. Don't forget that Sipo is married in community property, meaning that they should go half, him and his wife. Right. So you can do it in a different way. You can say 150 multiplied by 50%, or you can do your entire gross income amount, and then you do your exempt, and then you divide it by 2. Still, you're going to arrive at the same answer. All right, let's have a look at a question. I think it's 3.4. It has a medical aid. I want us to have a look at the medical aid quickly question. I think it's 3.4, so that we can move to the medical tax credits. Oh, it's 3.5, sorry. Does it have a medical aid? Medical aid, good. 3.5, everybody's clear on the previous part. When Lucy Lowe is 38 years of age, monitor or make sure that you grasp with the 8 factor there. She's married out of community or property, minus 1 problem, to young Lowe, and they've got 2 children, 5 and 8 years. She had the following expenses, incomes and expenses for the 2021 year of assessment. Let's look at the gross income part. We've got a salary, 240,000. We've got a bonus, 20,000. We've got South African interest received, 30,000 rand. We've got foreign interest received from a foreign company, 7,000 rand. And then we've got the foreign dividends from a foreign company listed on the JSE with 5,800 rand. Look at, we only have one note here concerning the medical aid fund. Lucy contributed 400 per month to the medical aid fund for the full tax year. An employer contributed 2,100 rand per month for the full tax year. She also had the other qualifying expenses of 13,200 rand. Remember, this is the out-of-pocket money. Her husband and 2 children are the dependent on medical aid, and none of them have a disability or none of them has a disability as defined. Right, first question, 9 marks. Lucy's low taxable income for the 2021 year of assessment. Right, what's your take on this? I need to give this like 6 minutes so that we can move to the medical tax credits. I don't want us to do it next week. Pal.
Sir.
Yes.
Can I give it a try?
Sure. That's what I want.
Okay. First we have to find the gross income.
Gross income. Thank you.
Yes. And then when we add all the incomes received, the total is 355,000 rand.
Also, you added 240 in 2030 and 7,000 and 5.8.
Yes.
Okay.
And then.
So the total gross income, you said, how much is it?
It's 355,000 rand.
355,123. Okay. Right. Then we're obviously going to look at exempt, right? We're going to look at the exempt incomes. Am I correct?
Yes, sir.
Okay. Which of the items do qualify as your exempt? Okay. Is it PEL? It's PEL, right?
Yes, sir.
Okay, PEL, let me help you there, my dear. This is what you're going to do. Immediately when you put every amount that qualifies as your income, you're going to look at what qualifies my exempt. Okay. We know that the South African interest received qualifies for the exempt. But there are 2 things that you have to look at there: the age factor and the limitation.
Yes.
So we know that with the age factor, anything below 68, we're going to be limited with an amount of 23,800 rand. Make sense?
Yes. Yes.
So it means that you're going to say interest received locally, and then you're going to say Lucy.
It's going to be a 7.
Please come again.
Is it not going to be a 7,000 rand because it's below the 23,800?
It's going to be 23,800 rand itself. No, sorry, it's 30,000. It's not 7. I think you're confusing the foreign and the local.
Oh, sorry. Yes.
Yeah.
Yes.
So basically, you're going to have
23,800.
Yes, limit. You would say 23,800, simply because this person is less than 65 years of age, and then it's going to qualify as your deductions. You just bracket that. Remember, foreign interest, they're not fully exempt. So you're just going to say, you're going to mention it, foreign interest, and then you put a dash. It has no effect on this one.
Yes.
Okay. Yes. Is there anything else that has to be exempted?
The foreign dividends received from a foreign company listed on the JSE Ltd.
Foreign dividends, yes. I assume you'd say fully exemption. Is it fine?
Is it exemption when the shareholder holds 10%?
Sorry?
Is it not a full exemption when the shareholder holds more than 10%?
10% or more.
Yes.
Yes, even if they are listed on the JSE markets. Even if they are listed on the JSE markets, they are fully exempt. But let me follow what you're saying. So should I put it under the brackets or should I just not include it at all? We'll see the solution. What do you take? What is your take on that? Should I exempt it? Should I not? Should I say multiply by 25 divided by 45?
I think it should be partially exempted.
Okay, so I would say 25 divided by 45. That's what you say.
Yes, sir.
Okay, no problem. Okay, so it means that remember our gross income minus the exempt is going to give us what's called the taxable income. That's what they're looking for here out of your 9 marks. But we'll see whether the solution favors us or it doesn't. Calculate Louis's net normal tax for the 2021 year of assessment. What happens here? What's your approach? Number B, how would you approach this kind of a question?
Oh, number B.
Yes.
Number B, this is where you look at the tax table.
Tax tables. Okay, let's assume let's assume that our taxable income calculated there is, let's assume that is 300,000 rand. Okay, and we're gonna penalize you for getting that one wrong because we need to use this for the table.
Sorry?
I'm saying that we need to use this for their table. Anybody with the table quickly there, can you just tell me at which line, or Pal, you can tell me at which line does it match it? How are you gonna do that? Normal tax per tables, right? Make sense? Everybody there? All right, what is the page number for the tables? Okay, let me do this because I can see the time is actually killing us. Let's go to the solution quickly and see on how the process was followed. But anyway, you are supposed to take the taxable income that you got from the gross with an exempt, and then you match it with a table. So it's 3.5, right? Is this one? All right, I just want to go back to first thing first. Let's see if we did the, so okay, can you see that we left the fringe benefit part for the medical aid contribution? Remember when I told you that it forms part of your gross income?
Yes.
So you're supposed to say employer's contribution, 2.1 multiplied by 12, 25,200 rand. That's the part you guys have missed. So the interest, you got it right, 23,800 rand. Remember it was 26,000 rand initially. So the dividend exemption, Pal, can you see where you missed your 10? It's fully exempt.
Yes, sir. I can see it's fully exempted.
Are you happy with that part?
No, I'm not clear, sir.
I beg your pardon?
I am still not clear why it wasn't, because it didn't say anything about the shareholder holding 10%.
You're right by saying that, but for the mere fact that the shareholders, because usually they will tell you that partially, not partially exempted or something. I don't know if you remember. I think it was 3.8 or 3.9, the question that we did, where you have to say 24 divided by 5%, divided by 45.
So they will let us know if it's supposed to be partially exempted or not.
They will. But if it's silent, that means it's a full exemption.
Okay, sir.
Yeah. So you remember the foreign interest where I said you just put it down there and say dash. So somehow it's there, but they didn't put it because it means anything. It doesn't mean anything. Okay. Right. We got our result was taxable income of 298,400. So let's look at part B. Is the taxable income 294? Can you see on how sequential is needed? So the amount you got up there, you should use it when you are required to do the normal tax, net normal tax. Right. We got taxable income of 298,400, and then we're looking at the table. I'm not sure which line item it is there. So you're going to say 298,400 minus 259. I think it's the second line item. And then you multiply that by 26%, and then you plug the figure on that line item of 37,062. So normal tax is 61,112, obviously after the adjustments. Okay, and the question can come up and say calculate the normal tax. You must know that you need to look for the table. They can say calculate the income tax, taxable income, they give you the figures. They say out of the taxable income of so much, calculate your normal tax. This is where you don't have to be confused. Quickly jump into the table, do your calculations, bring me the 6,112, sorry. The rebates is actually concerning the, you remember that age factor thing with the rebates, threshold, 65, 75, or 75 plus, or below 65, and greater than 65 to 75, and 75 plus, where it says primary, secondary, and tertiary. You still remember that? So clearly this person here she's great. She's lower than 65 years of age. That's why you see only she qualified for the primary, which is 14,958. It's always given. It doesn't change. It's always for 2021. It's always 14,958. So let's look at the medical scheme fee tax credit. So you remember that one that is usually announced by the minister on a yearly basis. The MTC 312, looking at the number of dependent. That's him or that's her and her husband. 312 multiplied by 2. They've got 2 kids. 215 multiplied by 2. It doesn't change. It's standard. The only thing that can change here is the dependent. So it gave us an amount of 12,816. Right. Can you all see the free marks? How you can get the free marks, guys? Right. Medical expense credit, medical aid contribution for 8,500 plus 25,200. You remember the fringe benefit along with what the taxpayer paid. It totaled with an amount of 8,000 to 25,200 rand. That's per year. It gives us an amount of 30,000 rand in terms of contributions toward the medical aid per year. All right. So that needs or requires separate calculation. All right. And then, so that amount of 12,816. You remember that amount of 12,186. So 816 for the MTC medical tax credits. You multiply that by 4. Then it gives you an amount of 51264, right? Then obviously going to look at the qualifying medical expenses. Out of pocket. So the out of pocket medical expenses, it was paid 13,200 rand. Okay. And the reason why it's in out of the pocket is because of it has to be claimed back. Right. So we've been told that you need to take your total taxable income and multiply that by 7.5%, basically because of the medical tax credits. Okay, so 298,400 multiplied by 7.5, and then you minus that by 22. Sorry, it gives us 22,380. Right? There's a 0 there. So meaning that we are actually less. We can't claim anything back, or we can't carry anything over. The first one we've got an excess of the 0, and the second one we've got an excess of the 0 as well. Right, let's look at the normal tax. It's an amount of how much? 33338. Right. Just before I move to the actual medical credit, let's do this. Does anybody have some difficulties with this? Next time we're going to do questions and I'm going to ask you and then you are stuck again. I don't want it to be like that. Yes, Hopozo?
My confusion is there at medical scheme fees tax credit. Like, I don't understand where they got the 319 times 2 plus the 215 times 2. I'm trying to figure it out, but I can't get it. Like, I don't know where it comes from.
Is it 350 or 19 multiplied by 2?
Yeah, those calculations there, I'm not sure where we get those things. I just want to understand those. At least I'll be able to calculate more better if I can understand where we get those things. For other calculations, I get it, but for this one, I'm still stuck there.
All right. Thank you for the question, Kubuto. All right. Here's what happens. Every year, the minister, announce how much will be the threshold or the medical tax credit that qualifies for everybody who's paying the medical aid. All right. So this amount is standard. It's in the book. You don't have to come up with it in your mind. It's noted to be standardized at 319 for the taxpayer and the main dependent, right? And 215, it's there as well as standardized. It's actually for the other dependents. When you look at our question there, these people that are covered by the medical aid, they are 4. We've got 2 first dependents, 2 second dependents. The 2 first dependent is the husband and the wife, and the second 2 dependent is the children. Hence you see 319 multiplied by 2, and then hence you see 215 multiplied by 2, and then you multiply that by 12, because it's the whole 12 months as the year of assessment. So it's called the medical scheme fee tax credits.
Okay, now I see.
You see
Thank you.
So
yes.
Yeah, it doesn't have to come up somewhere else where it's going to confuse and stuff like that. It's in the book. It will always be like that.
All right, thank you.
Yeah, so in fact, these are the amounts where when you are prepared to write an exam, make sure that you write them on your wall somewhere. You just write them on a paper and then you put them on your wall. And then you'll be able to see, oh, it's 319. You don't have to page up on your book or study that. and then you will see, okay, 215. Then you multiply that, look at the number of dependent. Are they in medical aid? Are they not? Then that will be it. Now you understand, right?
I do. Thank you.
All right, thank you very much. Any other questions? I just want to quickly go to Learning Unit 2. Is it Learning Unit 2? All right, please bear with me. Just want to find out that exact page. Should be Learning Unit 3, I think, or 2. Right, page, if you can go to page 45 there on your medical tax credit. When somebody is contributing toward a medical aid scheme, the person paying their own medical expenses are allowed to get the medical tax credit. Okay, so this is where the part was actually confusing you on the rebates. Okay, so if you find a taxpayer who doesn't pay the medical aid or contribute towards the medical aid, they won't qualify for this part at all. Okay, it's actually called the rebate, that they form part of the deductions in terms of the normal tax payable, right? So that's why you remember when we say that on that example, the age and the disability part play a role in terms of the medical aid, medical tax credits, right? So it's important to look at the age of the person because of the primary rebates or the secondary as well as the tertiary. Okay, let's look at the first medical aid. So the first medical scheme fee tax credits. Okay, it's known as the MTC, which is a rebate itself that is non-refundable, but which is used to, they just use this thing to reduce the normal tax paying person. They're making the tax lower, basically, indirectly so. Right, you remember the 319, you remember the 319 that we spoke about per month for the taxpayer who paid the medical scheme. If you look down there, it's there. 638 is actually for the taxpayer and their first dependent. So if you say 319 multiplied by 8, it should give by 2, it should give you 638. 215 is actually for each of the additional dependents, right? Hence you have that. The nice part about the medical aid is not complicated as far as what we did. How we did is actually the basic, and it will lead you to that one, unless if it's different in terms of the disabilities or the 8 factors and stuff like that. Right, I just want us to have a quick look at example 2.5. If you look at example 2.5, it says Kwame is 35 years of age and married to Dalaya, and they have 1 child. So automatically you know that there are 3 people in there. Okay, so Kwame contributed 12,000 to Health Net, a registered medical fund for the 2021 year of assessment. Required, calculate the amount of the medical scheme tax credit fee that Kwame is entitled to in respect to the medical contribution. Kopoto. If you can see Kwame and Dalai, they qualify for 638. It's 319 multiplied by 2 multiplied by 12. It's 7656. And then they've got 1 dependent there. So you can just simply say 215 multiplied by 1 multiplied by 12. It will give you 2580. So the amount is 210,236. You can see that is below how much the contribution was made. It's 12,000 rands. We don't care. You understand? We move on because you can't claim the thing back. I hope we are still on the same page. All right, let's have a look at 2.6. Jabulani is 56 years old and married to Kaya, who is 55 years old. They have 2 children, aged 5 and 3. Jabulani contributed 1,900 to a registered medical aid contribution fund for the whole year. It's quite a low medical aid payment. Jabulani has correctly calculated taxable income of 345 for 2021 year of assessment. All right, if you look at this kind of a question already, the taxable income has been given, meaning that you don't have to worry about that part of your gross income minus your exempt income. It's there already. Okay, so they're looking for the net normal tax payable for the year of assessment. So when they're looking for the net normal tax, that's where you have to say, oh, my table, first thing. Secondly, how old is the person? So that we can deal with the issue of the rebate in terms of the primary, secondary, and tertiary. Oh, my medical credit. How many people are there in terms of the first and second and third dependents or fourth? Or how many dependents are there as part of the taxpayer? Let me just put it that way. Let's have a look at the solution. So we start looking by the taxable income. Yes, it is given. It's 345,000 rands. It's there. Let's look at the normal tax. That's where you're going to look at the tax table and match that line items that qualifies for 345. And then you adjust it. So it's there. They multiplied that by 31%. That originate from 345,000 rand, which is your taxable income. Then you minus 321,600. And you multiply that by 35 and you add it back to 67144, which is the normal tax of 74,398. Right. How old is the person? Obviously less than 65 years of age. So this person would only qualify for the primary rebate. It's 14,958. Okay, let's look at the MTC, medical tax credits. Okay, so Jabulani and Kaya, they qualify for 319 multiplied by 2. It gives us 3638. And then they only have one dependent, one additional dependent, which is 215. They have two, sorry, they've got 2, 5 and 3. So it's 215 multiplied plus 2 multiplied by 12. All in all is 12,816. The net normal tax to be paid was 46,426 rands in a year. Any questions? Any questions? Okay, no problem. Let's have a look at the second one. So guys, the first one we dealt with was called the MTC, right? The medical tax credit. Actually, only that one. Let's look at the additional medical expense tax credit. The additional medical expense credit, it's called the AMTC. It's a rebate which itself is non-refundable, but is used to reduce your normal tax per person. Okay. So down there are those kind of help that they do qualify with regards to the AMTC. Okay, that's your responsibility to read. Then you're going to look at the dependent as well. So this kind of a theory with regards to the dependents, you can just read it for the sake of reading it. But I don't see them forming part of your exam, but you must just know them. Right, let's look at example 2.7 in terms of the qualifying medical expenses. Qualifying medical expenses is actually what you pay out of your pocket that is not covered by the medical aid. Right, so they say if Sam belongs to a registered medical scheme, to which Dr. F, who is duly registered medical practitioner, submitted a claim of 1,000 rands for consultation fee. The medical scheme only paid 600 rand for this expense, resulting in Sam having to pay the remaining balance of 400 rand to Dr. F. Determine the medical aid qualifying expense. So it will be 400 rand as the difference between 1,000 rand and 600 rand that was not paid by the medical scheme, but paid by Sam is regarded as a qualifying medical expenses, and it will be taken into account when the AMTC is determined. Any questions? Qualifying medical expenses, it's specifically how much you take out of your package to add on what is shortage for your consultation in terms of health. Right, disability plays a huge role. Make sure that you read your theory under your disability. Right, let's have a look at what it says. Calculations of the additional medical expense tax credit. Right, we're looking at a person who is actually 65 years of age or older or may claim the following additional medical tax credits. Okay, you remember the formula that we spoke about, that the 3.3% multiplied by open brackets A minus minus into open brackets 3 multiplied by B multiplied by or plus C, and then you close your brackets. You just need to know who qualifies where in terms of the formula. Okay, so if the person who is actually 65 years of age and older, in terms of the additional medical expense tax credits, this formula will play a major role. Right, let's look at how A, B, and C represents. A represents the fees paid to a medical scheme for that year of assessment. Make sense? Meaning that how much you are paying towards your medical aid for the year, it will form part of your A. And your B will represent the MTC for the year of assessment. You remember when we multiply that 319 multiplied by 2 and 215 multiplied by 2 and then you multiply that by 12. That's your B. And then C represents all the qualifying medical expense paid during the year of assessment, meaning that any additional amount that you take out of your packet and you pay, it qualifies under your C. So 33.3% is actually a standard rate, so you don't have to change that. As soon as you've recognized which one qualifies as part of your A, B, and C, this should be easy, because all you need is the person younger than 65 or is the person greater than 65 years of age, and then you bring this formula and then you do it. Listen, if you don't think you will recall this, make yourself a little note, put that on the wall. Every time when you come up with this kind of a question, refer to that one, including the exam. Right, the disability part, remember the first category is the age factor, greater than 65. The second part is your disability, but the same thing has been applied for. Right, 33.3% multiplied by A into 3 multiplied by B plus C. The same thing, A represents the fees paid to the medical aid for the year, and B represents the MTC for the year of assessment, and C represents all the qualifying medical expense paid during the year of assessment. That's your out-of-pocket. that you have to pay. Right, look at 3 there. All other persons do not qualify into categories above meeting the following AMTC. Right, meaning that everybody else who doesn't qualify, they qualify under this one. They can be younger than 65 and they would be there. They might not be a person of a disability, they would be here. Right, so 25% of the amount is by which the sum of the amount is below exceeds 7.5 of the person's taxable income, excluding retirement fund lump sum benefits, retirement fund lump sum with withdrawal benefits, or the severance benefits before taking the amount for the account into AMTC. All fees that have been paid by the person to register make a similar qualifying foreign fund exceeds 4 times, right? 4 times the amount of the MTC to which that person is entitled. I don't know if you guys have seen or recognized somewhere, but I thought you guys would just ask me a question when we were doing that part, where it said that you multiply, you take your 4 and then you multiply that by MTC. So it's exactly the same thing that they are talking about that. And then when you go further down there, they used 7.5 of your taxable income. They gave you how much would be, and then that's when we determine the net tax. Okay, let's look at how the formula has been distributed in terms of the explanation. So obviously your qualifying medical expenses will play a role as well. So the main states specify there in II to say that it's certain out-of-pocket expenses. Right. A, it doesn't change. It represents the fees that you have to pay towards your medical aid for the year of assessment. And B is the same thing, your MTC. And C represent all the qualifying medical expense. However, we just have an added component, which is a D, that represents the taxable income, excluding any retirement fund lump sum benefit, retirement fund lump sum withdrawals, benefit, and severance benefit. So out of all those formulas that I have explained to you, it's only this one that requires a different approach altogether. Instead of 33.3%, we've got 25%. Okay, and then we've got a B. So we've got a 4 that multiplied by B. Let's look at what B is. It's your MTC that we calculated prior when we said 319 and 215 and blah, 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 blah. Then you multiply that by 4. Okay, we did that example, you and I just now. Okay, we bring the D, that is your taxable income, and then you multiply that by 7.5. It's a process, it's an approach, it's a steps that you have to follow when you do that. Quickly, I just want to, with the 6 minutes remaining, let's have a look at, I was looking for somebody very complicated. Okay, but anyway, there's no need for us to do that. Let's look at this one. It says, for the 2021 year of assessment, DJ age 65 and the pension of 215, DJ can pay the following medical expenses: 3,100 per month for the medical scheme contributions for DJ and DJ spouse, and 9,000 rand out of the pocket expenses qualifying medical expense. If you can look at this scenario question, it doesn't have any additional dependents, meaning that we're going to start with DJ and his wife. Right. So let's look at the question. Calculate the normal tax liabilities of DJ for the year 2021 year of assessment. Taxable income is 215. It's given there as part of your pension. All right. Taxable, normal tax. I don't know if you guys can realize that the steps is actually the same. It doesn't change that much. Taxable income, so you go to the table, 215, so obviously you're going to match that line item, 215 minus 205 multiplied by 26% plus 37,060. That should be easy for you this far, right? Primary rebate, this person qualified for primary and secondary. Can you all see that? Because this person is 67 years of old age and this person is actually below 75. That's why you don't see the secondary. Okay. MTC, in terms of section 6A, you don't have to put the section down, don't worry about that. So it's 319 multiplied by 2 multiplied by 12 is 7656. This time around, people might be surprised, like, why don't we have the 215 multiplied by 2 or 1 times 12? Because we don't have any additional dependence. That's why it's as easy as it is. AMTC does represent mainly your medical aid. What? Determine the additional medical expense tax credits. Okay, so you remember the formula for anybody who is greater than 65 years of age? We said is what? 33.3% percentage multiply or open up the brackets, and I think you've got your A and your B, and then you plus your C, something like that. But let's look at our A. It's what you have contributed towards your medical aid. It's 3.1 per month. You multiply that by 12. And then your B, remember, my MTC is how much? 7656. You bring that into the picture. It's already calculated. My C's out of the pocket that I made, 9,000 Rand. Can you see? So I know back then students used to get marks for knowing on how to put this amount sequentially or by altogether. But the formula to calculate that is 3.3% multiplied by A minus 3 multiplied by B plus C. Sorry, I forgot 3 when I explained that. 3 multiplied by the medical scheme fee tax credits, 3 multiplied by 7654. If it was a different approach in terms of the formula altogether, remember you were going to use 4 instead of 3. I don't know if that makes sense. Let's look at, there was an excess of 14,232, and then you add your qualifying medical expenses, is 23,232. However, remember you need to multiply that by 33.3%. This formula here, that's your starting point. And then obviously, AMTC is an amount of 7736. That's your AMTC tax, right? So let's look at up there, our taxable income. We had an amount of 215. It's just like that. So there's a normal tax liability because remember we adjusted our taxable liability of, normal taxable income of 215. So we had our the net normal tax of 8615, and then the AMTC of 7736. There's a liability of 879. Any questions?
Yeah, can I get clarity on something? No?
Yes, sir. Yes, ma'am. Sorry.
Right.
The MTC.
Yes.
Yes.
So it says that 319 is for any taxpayer, right? And then it further says that 638 is for taxpayer plus one dependent.
Yes.
Right? And then there's a 215 for any additional dependent. So
That's
if
correct.
I'm a single taxpayer and let's say I have 3 kids, will it be 319 times 215, 215, 215, or will it be 638 times 215, 215?
Right. You said, assuming that you are the only taxpayer and then you've got an additional dependent of 3.
Yeah.
Is that what you said?
Yes.
All right. Because you are the main dependent on that and they're not the second main, meaning maybe it's your husband, for example. So what you're going to do, you say 319 multiplied by 12 because it's only for you, right? And then you're going to say 319 multiplied by 12, and then you close that in the brackets. And then you say plus 215 multiplied by 3 multiplied by 12, and you add them together to make your MTC.
Thank you.
Okay,
All right.
but it depends on how you classify your dependents, obviously. If you've got the main and the additional dependents, that's where it's going to be a little bit tricky. But if you've got the main, let's assume that it's your husband, then you just say 319 multiplied by 2 multiplied by 12. But if it's only the additional dependents, we just say 215 multiplied by 3, and then you add it back to you.
So it will be 319 for me because I'm the only one paying
Yes.
tax. Okay.
That's
So when it says 638, it means then there's 2 of us paying.
there's 2 of you there. Yeah.
Thank you.
Thank you. I just want to look out at a different question altogether. Okay, I'm going to jump up on this, jump up that one of the disability. All right, let's look at how we approach the question based on that category. So I hope you can all see 2.10. I just want to take a break quickly before I go to the accounting class. I think by 10 past we should be done. Right, example 2.2 says calculation the AMTC for all the other taxpayers. Remember, in terms of these categories, they're highly possible that you might get multiple choice questions based on these different types of categories. Right, it says during the 2021 year of assessment, Mandla age 34 earned a salary of 400,000 Rand. And then Mandla contributed for 6,900 to ABC medical aid. Mandla is claiming an allowable out-of-pocket medical expense of 19,232. He has kept the proof of all expenses. Manda is the main member on ABC and has 2 dependents. All right, somebody was asking this question. I think this is the one that we are looking for now. Okay, but they've treated differently. I'm not sure on how they do that, but let's have a look at that. The calculation of the tax liability, taxable income is 400,000 Rand. Normal tax, you know, the table, right? Primary rebates, age factor below 65, only primary, 14,958. The MTC, 638 plus 215 multiplied by 12. Right, whoever just asked this question, I think it's in relation to this one that we're doing now. It's something that I have to find out because I'm not sure why did they say 638. Because according to me, they're supposed to be 319 multiplied by 12 and 215 multiplied by 2 multiplied by 12. As they are three, there's a main member and two dependents in here, but I'll find out about this one. I'm not sure why did they do that. Right, so let's look at the additional medical tax credits, section B, rebates. It's 46,900 Rand. This is what Mandla has paid. B, MTC, it's calculated up 10,236. And then my C is 19,232. That's your qualifying medical expenses, the out-of-pocket one. And the D is my taxable income. Right, formula to calculate that. That's the last category formula. It's 25% multiplied by A minus 4 multiplied by B multiplied or plus C minus 75% multiplied by D. D is your 400,000 Rand. Okay, let's look at how they determine the formula then. It's 4 multiplied by the medical aid scheme tax credit. It's 10,236 multiplied by 4, right? And the excess medical contributions, it's sorry, I just want to see something quickly here. 46,900 minus 4 multiplied by B. Okay, 4 multiplied by 10,236. Okay, that makes sense. And then the plus C. My C would be the qualifying medical expenses, 19,235. And then they took 7.5 multiplied by D, which is your 400 multiplied by 7.5%. Okay, right. Now I was worried about C because I didn't see it there. Right, and so the contribution calculations was they said 4 multiplied by the medical scheme fee tax credit, which is 10,236. The MTC above there is 40,944, and then we've got an excess in terms of the medical contributions is from 46,900 Rand. So your qualifying expenses, that's your out of pocket, is 19,232, and we've got the excess medical credit as well of 25,188, and then we've got the D. That's your taxable income, your salary up there, 400 Rand multiplied by 400,000 Rand multiplied by 7.5%. And then we've got there 30,000 and our access is limited to a mil. Looking at the normal tax liability. Remember, let's say our access of 25,188 is 30,000 instead of 25,188. So we're going to have an access that we're going to minus. We're going to after we get this figure here is to be transferred here, and then you're going to be deducted it from 66,258, and then your net normal tax liability will be 66,250 because there was no excess in terms of the medical aid contribution. Right, let's have a look at any questions just before I close down. Is there any questions? Right, please, when you get home, make sure that you do your medical aid question. Starting from your MTC, you need to understand why the 319 and the 215. Going further down to your medical credit in terms of the categories. Anybody age greater than 65, anybody with a disability, anybody below the age of 65. Look at how those people are treated in their medical aid in terms of their different formula. I promise you, if you follow that with the example, you're not going to get lost. Please make sure you do that when you get home. So far, I can see everybody else is comfortable with their tax tables, and that's okay. That's a good thing. And you're actually, okay, make sure that you look at what's called the employee tax and the professional tax payments as well. Those are just the copy and paste thing at the end of your taxable income calculation. Not taxable, normal tax liability calculations. Have a look at your those things that I've just told you now. Try to figure out in terms of theoretical questions, what could be possible to be coming out of your exam. Visualize things, ask things on your own, talk to your books. Right, since there are no questions here, I'll see you guys next week, God willing. And we are moving forward as of next week. Moving forward So the next 2 chapters, I think they are mostly theory. Is your general deductions, formulas, and the rest. I think it's just a theory that is going to take us like maybe 20 minutes or 30 minutes. And then we're going to move on to, I think we're going to cover 2 learning units, including the theory as well as the calculations next week. Look, the good part about this is your content is quite small. We'll be done with it soon before the end of our 30 hours. So we're going to practice a lot and lots and lots and lots and lots of questions. And I think everybody else will be very clear when we write your exams. You'll be done soon enough. Thank you very much. Enjoy, go practice.